Hello, hello, hello. My name is Natasha Williams, and we're going to get into this top 10 life insurance myths. All right, let's crack these myths wide open. So, the topics of these myths are coming from Investopedia, but I'm actually going to crack it with my own sense of knowledge. All right, so I don't need coverage because I'm single and I don't have dependents. All right. So, you're single, you don't have any dependents, but the good thing about that, well, I'm going to assume you're also young. And the good thing about that is that you can lock in a lower insurance rate than you waiting till you're much older, and not even age, but just going into the doctors and anything that shows up in your MIB that could cause your insurance rate to increase. You don't want to risk that. So basically, the younger you are, and before you actually start your journey, start your life and start having kids and get married, you actually want to go ahead and solidify your insurance. Hopefully you have parents that have already purchased that for you, and you can actually take over it when you become older. So my life insurance coverage only needs to be double my annual salary. So those days are pretty much gone. So and I do agree with Investopedia, basically saying that you have to take a lot of things into account. You have to take in account your mortgage and any debt that you may leave. You just need a full cash flow, as they say, analysis. So you definitely want to make sure that your insurance agent is taking in consideration everything that you got going on for your life to get the right analysis on how much life insurance you should buy. My term life insurance coverage at work is sufficient enough for me. Now I kind of ad-libbed on that, and I can even say it a different way. I have insurance on my job. So the issues with that is that sometimes you cannot take on that benefit if you're no longer with the company, and they normally give you like a small amount. And it's probably like 20,000 or 50,000, and they're not really taking analysis of your life, just your income, or based on what they have for you as your value. You want to make sure that you have something outside of work. You never know what's going to happen with that. They also have their own stipulations. So just let your financial advisor take a look at it and make sure that it's suiting all your needs. You don't want to just put all your eggs in one basket. So the cost of premiums will be deductible. Basically, according to Investopedia, the only way that it will be deductible is if you're self-employed, and it is, basically if you're self-employed, that's the only way it could be used as a deductible, and there's a certain form that you have to fill out in order to use it as such. Have life insurance at all costs. I don't know where these myths are coming from, but I guess if I wanted to reword that, some people feel like shopping around for life insurance is it's like the thing. It's not like car insurance, and a lot of times people don't realize that. For the most part, life insurance costs the same amount, and let me tell you why. The only reason why you're going to be paying less or more for a type of life insurance is the stipulations that come behind it. So if you are willing to forego actual specimen exam, so you give your blood or your urine, that could reduce your cost of that type of life insurance depending on so if you're willing to do a blood or urine exam, so you basically give your specimen to get this whole life policy, in return your rate could be cheaper. If you buying term or whole, that would basically make your rate different, obviously. Whether you're purchasing it from maybe a company that is A+ rated, it could shift a little bit. It's kind of like if you're going to buy the Cinnamon Toast Crunch actual brand, or you're going to buy the cinnamon breadcrumb brand from Aldi's. You know what I'm saying? Like, you could save a little bit money, but it's just not the same thing, and it won't be that much different. And it's pretty much cost the same. It depends on you at the end of the day. For a significant different amount that you're looking for as far as shopping around, you would have to change your age, your medical, your MIB. All these companies pull from the same way, so shopping around for car insurance is not like the thing. This one is fun. I made a video about this already, kinda. You should always buy term and invest the difference. That's not always the case. I didn't even read the Investopedia description of how they feel about it, because I have very strong opinions about it. I sell both, so no, I'm not salty when a Primerica agent sells term, because I can do so too. I just want people to be educated on the truth behind that. And if you don't have anything to offset term life insurance, and that's all you're banking on, I don't think it's intelligent. I don't. If you don't have real estate or other means of financial wealth, you know, I don't think buying term is going to work. Next up is variable universal life policies are always superior to straight universal policies, and very straightforward. Variable life policies are definitely involved in the volatile market, and straight universal have like a floor, and they're pretty steady as far as the percentage that you're making in your policy. So basically, if you're in variable and if the market is not doing great and is volatile, you can also not get the best result in a variable policy. So with anybody that would say that this myth is thumbs up, or will say that variable universal life policies are better, that's because they're hoping that the market would just keep shooting on up. And the myth is only breadwinners should buy life insurance policy, suggesting that if the dad is always going out making all the money for home and homemaker woman is at home, dad should have a policy and not homemaker. The problem with that is if homemaker passes, it feels so weird saying homemaker, but if she passes, then he would have to not only come out of pocket for her funeral, but also have to readjust his life, because now no one's at home with the kids. He has to find someone to do that for her. So, you know, of course, his life insurance isn't paying out because he's still alive. So it's not true. Funeral costs, you know, cost a lot of money. And to replace someone out the family is traumatic. I should always buy the return of premium rider with term policies. Of course, that's going to go by your own risk analysis. You know, if it makes sense to purchase it within the policy or purchase it outside of the policy. So you basically are reinsuring your insurance yourself for your premium, but that's totally up to you. And I don't think that anybody should always buy return of premium for term, because that's just based on you and your financial need. All right, so this one I'm just gonna quote right off Investopedia, okay? Because yeah, let them tell you. I'm better off investing my money than buying life insurance of any kind. And it says, quote, hogwash. Until you reach the break-even point of asset accumulation, you need life insurance coverage of some sort, bearing the exception discussion in myth number 5. Once you amass $1 million of liquid assets, you can consider whether to discontinue or at least reduce your $1 million policy. But you take a big chance when you depend solely on your investments in the early years of your life, especially if you have dependents. If you die without coverage for them, there may be no other means of provision as the depletion of your current assets. I'm going to end it here from your insurance bay, and I'm going to let you know that buying life insurance could be the best thing that could ever happen to you. I know someone that's under 25 that utilize her life insurance while she's alive. And that's golden, because a lot of life insurance is just only utilized as a death benefit. So you definitely want to take heed for your living provisions. Buy life insurance, because it's definitely better to have and not need than to need and not have. All right.